Hi there, Peter Camphin coming to you from the corporate office in Brisbane. And today I have with me two specialists in the areas of operation. Firstly, Carmen Costigan, who works as a business development executive for the Ray White corporate team in developing property management businesses. And also James Kelder, who's a finance consultant that works with Loan Market under the Green Finance brand. And we're just going to have a chat to you about another way in which we can continue to build the integration between agency and finance and the benefits. So great to have you both here today.
Thank you.
And Carmen, I'm going to start with you by asking you questions. Obviously your experience in property management is fairly broad, but one of the questions I'd start with is, you know, the importance of the asset value inside property management. We're always trying to look to grow them.
Yeah, absolutely.
So can you just express which ways are the best ways to build rent rolls and to build the asset values for our franchisees?
Yep, very good question. I do get asked this all the time. There are essentially two ways to build a rent roll. So one is by organic growth, which is obviously having a BDM, someone in the office to grow it.
Yep.
And the other one is acquisition. So there's no hard and fast rule, there's no right answer for everybody, but it may be a combination of both, for example.
Well, it's really important that forms part of the offering with inside any residential franchise business. As a client experience, we want to make sure that we offer that service. That's obvious. But from a franchising viewpoint or from a franchisee's own personal viewpoint, you're building the value of the balance sheet effectively by increasing the value of probably what is the most important asset with inside a real estate agency. Not dissimilar to trail books for you, James, in terms of building that asset, which gives that a recurring income.
Yeah.
So you spoke about acquisition, and there are a lot of rent rolls trading over the period of time of the last 12 months in different marketplaces.
Yeah, absolutely. Yeah, definitely.
And one of the reasons that we have James here is that James offers a funding arrangement, and there's two things that we want to talk to you about, James, is the funding of acquisition of rent rolls, but also how you can play a role in your commercial lending experience with our franchisees and Ray White, and what you can do to assist them to increase the value of their business or reduce their cost structures.
Yep.
I know that you can fund fit out finance, but I'd love to hear from you about some of the things that you do.
Yeah, of course. So, I mean, in line with what you were saying there about consistent recurring cash flow, that banks love that. So there's a lot of value that you can unlock in your rent roll that can be tapped into. So, a lot of business owners are wanting to reduce their operating costs.
Yep.
So for something like maybe buying their premises, you can leverage the value in your rent roll. Use that as a
point, James. Because a lot of people who start off in businesses, small businesses like ours, they fund a lot of and secure a lot of their debt against their personal assets. And as the rent roll grows and the value of that gives them the opportunity to secure debt against that and take the funding off private assets and make the business stand on its own 2 feet.
Exactly. Asset protection, right? So it's very important. And so going forward with that, if you can reduce your rental costs and channel that into an asset, that's a good win. Obviously, as well, in terms of improving the cash flow in a business. Acquisition, rent rolls. A lot of business, real estate businesses do that. And you can use the value in your current rent roll to again buy into that.
So tell me about some of the funders that you're using for acquisition. Is there specialists in this, or is there quite a number of different banks that you use?
So the way that it works is it depends on how many properties you have under management. Will dictate the funder that you go to. Obviously, different banks have different policies. Banks that play in this space, you've got all the majors do, and also Macquarie Bank. It just depends, and that's where we come in as well, because
so you can really shop around for this.
Exactly, right, and that's a big sort of tie into the value that we bring to a lot of businesses, because of the volumes that we write at Green Finance, and we understand the way that commercial debt's priced. We always negotiate people a better sort of deal in that sense. So really apply that competitive pressure.
You're getting the right price, aren't you? So it is worth shopping around.
Yeah, it makes sense.
Because the experience that we have with all rent rolls when they're required is that the funder expects to get all the trust funds, they expect to get access to their products.
Definitely.
They want to take over the general accounting. They want everything.
They do want everything.
So I'm not. Is that an expectation of all of them, James?
That's correct. But the good thing about that is knowing the value of that to the bank. Banks take a perspective of a full of what they call full of wallet perspective in pricing debt.
Yes.
So if you can understand the value that's in how much they would make, say, out of your transaction accounts, then that gives us a negotiating point to negotiate the actual price on debt downwards.
Right.
And look, one area we've been actually very successful at Green Finance and helping businesses out is actually reducing the costs on their transaction fees with the processing on the transaction accounts.
Oh, okay,
which is
right. Yeah, that's a significant saving, isn't it, really?
Exactly, right. And like, you know, if the banks are making you use their chosen processing house, these kind of things, you know, it makes sense that we can actually negotiate a discount there and save you a bit of money.
Great.
Yeah.
So one of the things that every new franchisee that comes into Ray White thinks about, they have to fit out a business, they have to fit out a premises, or indeed over time, you know, when you go into a business, you fit it out brand new. Within 5 years, it starts to look a bit tired. And rejuvenating or refreshing the premises is something that we can get funding for. So how does that work? Like, where do you secure the funding for a fit-out refresh or to fit out a commercial space?
Yeah, of course. I mean, banks provide that kind of thing, but in some instances you might be able to not access bank support. Appetites can change. So we actually have specialised funders for that kind of thing.
Is it like a lease, or is it?
Well, they secure it against the assets that are being financed, right? Okay. So in that term, the loan is dictated by the working life of the assets or the lease. So they structure it that way. But you know, if we can't go with the banks, we've got funders that have sort of low doc solutions that require little or no financial information to get these things done. So if you want a quick turnaround time, you don't go through the rigmarole of dealing with the bank. That's also a good sort of solution as well.
That's good. It's good to have that offering.
Yeah, a question that I had. Some of our businesses, quite a lot of them, already have established rent rolls, and there are some businesses that have loans on those rent rolls. So can you assist them?
Yeah, most definitely. And that's been an area we've reduced, going back to reducing operating costs. You know, because of the volumes that we write at Green Finance and knowing how the debt is viewed, we've had situations where we've come in and been able to negotiate rates on the current position without them even having to move banks.
Fantastic.
Oh, that's wonderful. You know, when you think about growing rent rolls and acquisitions, a lot of real estate agents manage properties on the periphery of the area that's their core trade area, and often they sort of package them up and sell off groups of, say, 30 or 40, which is a viable size.
Yes.
You don't have to have 1,000 on your rent roll to secure a deal of another 40 or 30. But if it's in your market that you can do that, then they're good ones to acquire, because there's always that argument about, do I do it organically or do I do it by acquiring it?
True,
You know, you can invest in a salary of a BDO or BDM to get out there and shake the bushes and find them.
Yes.
Or if there's an opportunity to purchase. So you really need a bit of both, don't you?
I think you do, absolutely. And some businesses, as you were saying, they have those smaller, maybe a smaller rent roll of, say, 40 or 50, where they're able to do that just to get some cash flow happening within the rent roll. So they might have, say, 100 and they're struggling to get to the next level, and they can purchase at 50 and get financing on those that can then help them get to the next level, maybe by putting more people into the team to then start growing it organically again. Yeah.
So just so that we're clear on this, James has been talking about Green Finance. So Green Finance, headed up by Daniel Green, operates under the loan market branding residentially and commercially, operates his business under his own branding, all aggregated through loan market. And Daniel offers a very broad range of commercial lending, from asset lending, which is cars and boats and trains and planes and everything, really. And particularly things like hotels, or pubs, hotels, childcare centres, all those sorts of things. And that's the space that you're in. I know you're operating with Raywood Commercial downstairs. You house part of your week in Raywood Commercial. So that's what you continue to do as well. You focus on the commercial side, which is why we're having this discussion here.
Absolutely. Yeah. So I guess the question, if I had a principal that has a rent roll that they're possibly looking to see if they can make that more attractive sort of deal, or if they're considering coming into the network and possibly buying a rent roll, which quite often happens as well, what would you suggest the best thing for them to do is?
And the first part of that is early engagement of us, because what we do is that we do all the financial analysis for the bank. Okay. So we make sure that the application is sent to the bank in the best light, and we make sure you're dealing with a funder that's going to maximise your leverage. So early engagement is key. And it's just a matter of a phone call. We do a lot of these style of transactions. We know where the market is, so you get to tap into our volume and expertise. So it's really a no-brainer. You wouldn't go to a bank direct.
one of the things I like about this is that, don't just shop at your own existing bank, shop it around.
Yeah.
And, James, you can hunt down the very best deal because we don't need to pay more than we have to for obtaining funding for businesses. So capital is expensive. As your business grows, you need to have access to funding, and that's where you come into the picture.
Yeah. It's also about time as well. So why go and do these things when you can tap into an expert and someone that has industry experience that's worked inside of these institutions and know how to do these things and have the relationships in place already? You're a business owner. You've got
Absolutely.
So, Camphin, thanks for giving us 5 minutes of your time.
You.
Probably maybe 10 by the sounds. And James, lovely to have you as part of it. It's a great way of bringing loan market and Ray White together in another fashion. Thank you.